thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss on a daily basis what's driving mortgage rates, how they're being impacted, whether it might come from economic calendar, headline news, or geopolitical. Sometimes even the market sentiment changes. It can create a lot of confusion out there, and now good news is now bad news, and vice versa. So we try to give the explanation and give you the insights as to what's driving investors, so that way you have a better idea as to if you're looking to refinance or purchase and falling rates. I give you an idea as to if you should lock in sooner or later, or if you're just interested looking to kind of follow along. Hopefully this will give you the information you're looking for. A little bit about myself is I am a loan officer. I do work with the national lender, so we do loans in all 50 states. If we could be of service with any refinance needs, or if you're looking to buy and get pre-approved, we'd love to be able to help you out with that as well. But mostly we like to try to be a good resource for you folks. If you guys got questions about anything, we like to be there for you guys and answer anything you might have. So please feel free to reach out and ask any questions you may want answered. So without further ado, we'll start off with the economic calendar, which today is actually light. We don't have anything going on today. The markets, in all honesty, are just kind of preparing itself for the big one tomorrow, and that is the CPI report. So tomorrow we'll have the CPI report, and that will be our big news for the day, or for this week. Thursday we'll get the PPI report, which probably because it's inflation will have some relevance, but typically because it's on the wholesale side and costs don't always get passed on to the consumer, it doesn't always get the respect it deserves. But because it's inflation right now and that's the hot topic, that's going to be we'll have some weight to it this time around. As you can see here, mortgage-backed securities are up 47 basis points. A lot of it has to do with stocks taking its cue. They were up earlier, and now they're going into negative territory. They've been taking a bit of a beating of late. So a lot of that money is just transferring over into investments like mortgage-backed securities. It's kind of a flight to safety ahead of, they're preparing themselves or getting ahead of itself for the CPI report. They're trying to see if inflation has indeed peaked or not. There's a lot of talk out there that inflation has peaked, but we're just trying to see. Well, we need to get that confirmation if it still looks like it's going to continue to rise, if it's going to looks like kind of subside, maybe move sideways or drop, or we're looking at the data to see where it's going right now. So hopefully tomorrow will give us a better notion of where we stand. So here's a little bit of volatility of what looked like today. As you can see here, pretty much right away it shot up, it kind of went sideways a little bit, and then it went up a little bit. Then we had probably about half hour or so ago, we had a little bit of volatility with this here as it rose back upwards. So right now, again, we're up 48 basis points, which again translates to us having better pricing today with our mortgage rates. Basically, we hadn't seen that for even last week, probably close to that midweek, like Wednesday maybe we saw, and then probably the week before was kind of the price of what we saw. Now we are approaching the 25-day moving average. We'll have to see. We haven't had much interaction with any of the moving averages of late, so we'll have to see if that will push us back down, or perhaps maybe we can continue the ride. But we haven't really had too many days that we were more than 2 days in positive territory, only to take another beating. Usually when we have 1 or 2 days upwards, we usually pretty much lose ground the next day. So stay prepared. Again, tomorrow is a big day. That is CPI, and the biggest fear, the biggest enemy to bonds, mortgage-backed securities, is inflation. So if it comes in hot, we could again have some problems here for mortgage-backed securities. Now, again, stocks are kind of reacting the way they are, primarily because, again, inflation and the Fed policy to strengthen, tighten policy as much as possible. And again, we still don't know, see any signs yet quite for inflation to get into coming down a bit. So we have to. So again, that's why there's so much more important to this reading here. Even though it's not the Fed's favorite gauge of inflation, but it does carry a lot of weight. The CPI does carry a lot of weight here. Again, yields have come down, so that's added a lot less pressure on mortgage-backed securities. We are down to 2.95 after touching just the other day on Monday, at 3.17. So that's a pretty big drop right now, and dropping below another average right there, or technical level. So lastly, we'll just touch on what's the average rate for conforming loan limits. These two have points built into them. The 30-year now is, we'll start with 15-year. It switched us on us 4.82, and the 30-year now is at 5.52%. So if you guys would like to get a rate quote, we can certainly accommodate. So please reach out. If you guys like these videos, please help us out. Smash that like button. We greatly appreciate you guys watching and taking the time to view and help us out. We greatly appreciate if you can help us out. You guys have a great rest of your day. Thanks so much for watching, and we'll see you guys in tomorrow's video. Have a great rest of your day. Bye-bye.